jobs, retail, and builder sentiment. Let's talk about it on Today in Mortgages. Hey, what's going on, Dreammakers? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. It's Today in Mortgage. Rich, today we're going to be talking about some different indicators. Tell me what we are looking at today.
Well, today we're talking about retail sales and basically builder confidence.
That's right, Rich. Some different reports dropped today that we're going to look at. We got some articles that you can click into to get some more information on these things, but you will see these reports kind of throughout the interwebs. The first one is on CNBC.com, and it says retail sales rose 0.4% in September, better than expected jobless claims dip. So, Rich, can you dig into that just a little bit more for us?
Sure. Retail sales, growth of 0.4%, which, when you look at it on the cover, it looks great. Like, woohoo, things are still humming along. But if you dig down deep into the depths of the data, you'll see that while there's a 0.4% growth, it's not more stuff. It's not like people are buying more things and services. They're actually probably buying the same amount of stuff, but it's more expensive. That's the problem. And there's tons of analysts out here that study this stuff. And if you look at, I sent you a chart this morning, hopefully you put it up right now. But what this shows is, this is the Fred report, and it kind of indicates history. What have we seen in the past that looks and smells like what we're seeing now, and what follows? And you'll see that when retail sales get to a stagnant position where they're up and down and they're showing growth, but they're actually, linear. They're not moving. They're not going really up or really down. Generally, recession follows. So now what you're going to see, like today, we're seeing mortgage pricing worse, and the markets and the stock markets are doing good. Woo, celebration. Things are still humming along. But once everybody starts to dig in the data, you might see a bit of a reversal when you see in the past, when this happens, recessions likely follow. So I don't know what this brings. I know what this brings for us today in the mortgage world is higher pricing, higher interest rates. And that's not good for us, not good for home buyers. But the analysts are looking at like, woo, things are still humming along in our economy.
Yeah. And so I guess what you're saying here, Rich, is that looking at this graph, in the recent past, we've seen a consistent amount of what the goods sold are, but the price of that has gone up. And that's where we see that delta in the retail sales dollar amount rising. Is that correct?
Yeah.
So let's move on to jobless claims. Rich, tell us about that.
It was down. We've got more people participating in the job market, which is all good stuff. And, it's really hard to be confident with these reports, considering all the changes that have happened recently. When they go back, we're going to revise the report from 3 months ago. Turns out we lost a lot more jobs than we did. That doesn't give you a lot of confidence in this reporting. And just in seeing what's happening, like we all know friends in the tech industry and other industries that are cutting back. There are definitely jobs being lost, but the numbers just don't quite show it yet. So again, we're looking in the rearview mirror with a lot of this stuff. We'll see what the future brings. Okay,
well, good to know, Rich. Let's talk about the last indicator we have is builder sentiment. Tell us what's going on with that.
Yeah, builders are excited. They should be. They're, right now, 62% of all the homes have some kind of concessions. They're either a price reduction, or they're contributing to the buyer's buy down of the interest rates, all of that stuff. But that's just right now, finishing out 2024. Things are going to slow up for them when you get into the holiday seasons. But, we just attended a builder event in Dallas 2 weeks ago, and they are excited. They are really looking forward to 2025. In fact, one of the comments made was 2025 is going to be bigger than we even expect. So that right there is builder sentiment. That should be telling you they're very confident about what 2025 brings. And to me, that's no surprise. I know to you, Michael, it's not either, because we talk about this often. Like, this is the time to be a builder. A lot of homes need to be built to accommodate the demand right now.
Rich, that's some anecdotal evidence, and we'll put a link into the show notes of an article here from NAHB, National Association of Home Builders, that's got some more quotes that you guys can look at. But Rich, when you talk to builders at this conference and they're confident, what are they pointing to? Why are they saying 2025 is going to be such a great year? Can you give us some information on that?
Well, the Fed is easing. Well, they are in an easing mode, right? They're talking about interest rate reductions for the Fed fund rate. That, things are starting to level off and normalize, which is, if you're a builder, you don't want to be building homes in a market where pricing for supplies are up and down and up and down. When things are normal, it's easier to forecast and build, and your traffic increases in your communities that you've built, or prospective buyers. Those are all good things for builders, not to mention the demand.
Rich, before I get into asking you what the combination of these three things that we talked about mean for us and our industry, I just want to remind everyone out there that information like this is something that we talk about here inside the network with our people, our loan officers, to make them better in the way that they can talk to their customers. So if you're interested in learning more about how to be a part of the best network in mortgages, click the Grow link below. We'll get you all the information you need to know about network funding. Rich, we talked about three different things today: jobless claims, retail sales, and builder sentiment. Kind of overall picture, what does that mean for us as these indicators go in maybe some opposite directions of each other?
It just means we're normalizing. This is what's happened. Now we're starting to see it all happen, and the Fed will adjust rates to accommodate. The markets will fix themselves. This is what we do in America. This is how our economy works. And, I'm just looking forward to what 2025 brings, because it'll be more normal. And that's always good. People feel confident when things are not constantly changing.
Rich, I would imagine on the one end that, less jobless claims means that, hey, the Fed mandate to, keep employment high is working. The retail sales staying flat means that things are at least not falling off a cliff. And so the Fed's got to be feeling pretty good about this, which kind of points to maybe less indicators that help us get to the further rate cuts. What's your read on that?
Well, we'll see what the future brings in reporting. Now the little whispers about recession. Remember, recession coming, soft landing for a recession. We're going to have a soft landing. And now, are we going to have a recession? And then recently, wow, there are signs here that we may feel a mild recession. So, it's just up and down. With a recession comes job losses. And, they've been talking about that for a while. It's just all this recent reporting, which is looking in the rearview mirror, this reporting, it is showing like things are stable. And let's hope that they do stay stable. But when you're spending more for less, items, when you go to the grocery store and you're still spending a lot more for less items, that's a problem. It's not quite fixed, and we're getting there.
Yeah, and Rich, both of these articles reference the upcoming election and the uncertainty around that, whether that's perceived or real. We'll have to keep our eye on that, keep talking about it. It's going to be interesting next month as we lead up to that and see what unfolds after the fact. So, Rich, thanks so much for making us smart on all three of these indicators today. Thanks, everyone out there, for watching and listening. Wherever you are, we appreciate you, and we'll see you next time on Today in Mortgages. Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.